The trade recap for Wednesday, May 6th, 2026. Let's go ahead and dive right in. So we had a kind of interesting morning in the markets, especially with the gap up. It was, yeah, getting pretty pretty irrational, I would say. Trying the last time really saw markets like this, and I don't know, COVID around there. But it's one of those things where it's like it's getting a little carried away, in my opinion. Now, obviously, that doesn't mean all that much because markets can, again, that's the saying, markets can remain irrational longer than you can remain solvent. And yeah, that is very, very true. So you kind of have to do what you can to trade things appropriately because if you don't, you will get your teeth kicked in. And that is a warning that comes from, again, my coach and someone who again I deeply respect in this because he knows exactly what he's doing and he proves it day in day out and day out. So if that's something you're needing or looking for because you're new or struggling day trading, then my recommendation is Pat Mitchell over at Trick Trades. You find the site at tricktrades.com. Go ahead and read up on him and what the service offers. He's been at this for over a decade now, and he does it on a professional level. And he knows exactly what he's doing, and he demonstrates that damn near every day. It's pretty amazing to watch, especially over time, just how he does this. Like I said, if you're interested, go ahead and read over the site. Now, if you kind of want a sampling of the information he offers, he does have a YouTube page. You can find that at Trick Trades as well. He's been at this for over a decade, like I said, and there are over 1,700 videos on his page. There's a massive amount of knowledge there. It's just going to be very difficult to crawl through every single one of those videos and pull that knowledge out. So, my suggestion would be to learn from the man himself. If you're interested, check the description below. A couple links to the memberships, save you a little bit of money in your first month so you can try it out and decide whether or not you want to stick around. And hopefully, we'll see you there. Now, let's go ahead and jump into the charts. Entries there. Let's do this first. Just a little housekeeping, kind of lay the land, especially for new people. If you're new here, we only trade SPY and Qs. That's the only two tickers we trade. So this top row here, this is SPY. This bottom row here, this is Qs. Over here on the left, we have our daily charts. And over here in the middle, we have a 1 minute intraday charts. And then I keep my order execution here on the right. Now, on the daily charts, you see these blue levels. These are the levels that Pat chooses to build a trade plan around. And he starts the night before and then refines them the morning of, depending on whether we gap up, gap down, do whatever. Once he sets these levels, they do not change for any reason. They're static. Now, I do add my what I'm risking off of in these red dash lines. He does not do that. That's just my personal preference. So, as you can see, we initially again gapped up and we were just again trying to figure out what levels to use with this gap up and everything, kind of how we moved in the pre-market session and with the levels we had. Uh, there was a couple like caveats that he was pointing out when we were watching. Q's was opening above this trend line that he had drew, and SPY was actually playing with just below it at the open. So that was something that we had to really kind of watch out for. And because depending on how it interacts and all that, you may not necessarily, again, you kind of get those conflicting signals almost. So you got to see kind of which one of these is leading versus which one's following. Um, because, yeah, it's going to potentially be super kind of weird or irrational day just because of how much we're gapping up the range from pre-market and where this thing could potentially go, especially if, again, like retail gets squeezed, especially right at the open. So with this level here on SPY, we were looking to again take that short with a reset short up above, so long as we open below, and that's what happened. Qs, we were going to take this level actually long, which was valid, but actually one that triggered first, but one I did not take, and there's a reason for that. Um, so when we opened up, Qs dumps down, comes down close to this level. In hindsight, again, could I've gotten a small starter there? Potentially. I mean, because of the range on this thing, as you can see, it was still, if you were to actually top bottom tick this, about 70 cents away from the level. So a little wide if you actually nailed the bottom. If you're more realistically like getting in here, you're talking almost a point away, which is where I would consider that wide. And now, given the volatility and range, was it all that wide? In that context, no, but wider than I would like to trade, especially with small size on a day like today, because when it says volatile, I take size out to try and again uh, compensate for the risk. So did not take the Qs trade because of that. Now SPY as it came up, I'll go ahead and bolt the entries. Entered just with one because it's one of those things where as it hit that trend line, it's like okay, that's kind of where we want it to kind of see what exactly it's going to do, and then just waited because I really wanted to see because I didn't want to get enough like any degree of size in with this just because of how weird the market's been trading the past few days, plus the level of range and volatility we were having specifically this morning. So kind of breaks above that, keeps coming up, breaks above this level, comes back, tests it, and holds and pushes. So it's one of those things where okay, now it's making a new high. So I'm only going to be really interested in adding and averaging up here towards risk with the expectation that I'm going to get stopped out because it looks like it's going to kind of do what it's been doing. And that's one of those things where it kind of goes on these runs and then just goes nuts and gets super stupid. So with that, just kind of added there. Only added with one, which was enough to get back flush when it actually sold back off. Not probably could have done two here instead of the one, which would have made again go from basically a scratch trade to actually a more decent trade. And the premium wasn't actually that horrible on SPY versus Q's. Q's was expensive. I want to say it started like the cheapest I think I saw it was like when coming down was about $3 a contract. So it was expensive. Now, granted, when it ripped up, it went from like $3 a contract to $4 a contract. So you would have been up like $100 per contract just on like those two candles easily, if not more, like 150. So that was kind of a little crazy there. Q or SPY was much more reasonable. So as I said, entered with one at trend, waited for the risk to add my correction, which was just one, should have been two. Um, Sold off down into support. In that sense, that's where it can hold. That's where you need to, again, take some off. So I took off one and then just held. When it came back up, I did not add a second time because I was expecting to get stopped out on this. And then it, again, rejected and then had this nice pop down, which I sold at. Uh, because just like the other, again, prior couple days, when they get these like violent pops down, they immediately get sucked back up. And as you can see, pop down, sucked up. Pop down, sucked up. Pop down, sucked up. Pop down, sucked up. Again, just kept doing it. So it's one of those things like that is very much the kind of the theme of the week is that it keeps doing that. So when you see that, you need to be quick on the trigger to take advantage of that to potentially cover out a position. Otherwise, again, you're gonna be left holding the bag and then you're gonna be fighting this thing, or you're just gonna get stopped out. And you should stop out. Like, do not fight like this thing at all. And that's something I know Pat did say during the trade plan was if this stops you out, just get out. Like, do not fight this thing because it's going to get stupid. And as you can see from the daily chart, it did get stupid. So, with that being said, the P&L on this one, $7 is what it is. Could I have made more if I had done my averaging a little bit cleaner? Yes, but all in all, happy with the management of the trade considering the gap up, the volatility, the games and shenanigans and the price action, and again, this typical pop down or sell off with that volatility and then just immediately getting bought back up. So it's one of those things where, yeah, it's I'm actually okay with that because historically speaking, when we get these kinds of days, I would trade with a little bit more size and I would usually take it in the face. So again, that is a habit that I have not regressed to or done in quite a while. And I'm glad to see that again, it is still not, again, trying to assert itself. So, all in all, not the worst day, especially given market conditions and the price action and everything. So, I'm trying to think like emotionally, didn't really peg anything, change, again, shift me around or anything. So, good there, good with the discipline, following trade plan. It's just that minor correction in terms of the add and the averaging. Because typically, again, just if you have even with one and you correct with one, the amount of that moves your average obviously is going to be half, versus that two would have been pushes it just a little bit further to where again it can really make these trades work. So that is something that again I have struggled with in the past. Um, but again, it's also something that I've recognized and am working on fixing. And that's all we can do in this is just identify those little things that need to be fixed and go ahead and fix them. So that is it for today. And I'm trying to remember since this is phase 5 of one and done. I didn't mention that before. And this is number, what are we on? 4? What are we on? Yep, this was number 4 of 10. Probably gonna be longer, more like 15, if not longer than that. But yeah, all in all, not the worst day in the world given what happened. So hopefully everyone else had a good morning session. And that's all I got. So we will catch you tomorrow for the next one. Have a good one.